Today, we're going to go through the steps that you need to take if you want to buy a home this year. If we haven't met, I'm Rebecca Richardson, the mortgage mentor, and welcome to my channel. I'm glad that you're here. The first thing that you'll want to do is start with your credit score. The big thing that I always want people to be aware of when you were thinking about credit scores is the credit score that you see is not likely the credit score that I'm seeing or that lenders have to use. So the biggest thing to keep in mind is that there are many versions of credit scores. You can have everything from the latest version of FICO, which is FICO 10, to what you can get with Credit Karma or other similar credit monitoring services, which is typically Vantage Score. And sometimes you will hear people say, oh, those aren't real scores. And that's not true because they are scores, but they're just being scored in a different manner. And what that looks like is it's kind of like different types of soda. You've got Coke, Pepsi, and grocery store cola. So it's similar, but it's not the same. The formulas are a little bit different and everybody has their preference. The thing to know is that lenders, what we have to use are going to be FICO versions 2, 4, and 5, and the oldest versions of credit scoring. And as a result, sometimes they are not as kind if you have had past medical events or things like that that have affected your credit. The best thing to do is to then talk with the lender early so you know really what your benchmark score is that we're working towards in terms of getting a mortgage. Now, if you don't have any credit history, what you really want to focus on is starting to build that credit history. Over 35% of your credit score is based off of credit history alone. One of the easiest ways to build credit is to have a close family member add you to a card as an authorized user. But even with that, you will still need to establish your own credit. If you have had no credit before, you can do what is called a secured credit card. And that's where you go to your bank, you give them, say, $500. They'll give you a credit line of $500, start reporting that to your credit score. And after about 6 months, you're kind of on the board in the sense of having a credit score. Some loan types, a credit history matters more than others, meaning that sometimes you need to have several lines of credit, and sometimes you really just need to have a credit score. And there are even loan options where you don't have to have any score. In that case, typically keep in mind that you will be paying a higher interest rate because the lender doesn't have any score to really be able to, base your loan off of. So what you will do is what's called non-traditional credit. And that's going to be things like cable bills, cell phone bills, even insurance, to show that you have a stable history of making payments, but you just don't have it reporting on your credit. Now, depending on your credit score will impact the best loan type for you. In general, these are the minimum credit scores that you have to have for these different loan types. First is FHA, which requires a 3.5% down payment if your credit score is 580 or higher. If your score is under 580 but higher than 500, you can buy a home with 10% down. Another option is VA. And you will probably hear a lot of times with VA that you need to have a 640 score. That's just simply not true. VA does not actually require that you have a credit score. So it is one of those loan types that you can buy even if you don't have a score. However, the higher your score, typically the better your terms are going to be. The lower your rate, the lower your closing costs. Most lenders will have some sort of minimum score that they require, which is going to be called an overlay, which basically means it's their rules. For example, with VA, we can actually lend down to 500, but some lenders may have minimum credit scores of 640, sometimes even higher. Another loan type is going to be conventional, which does require a minimum score of 620, but most of the time with the way that rates and mortgage insurance, if you need it, you're really going to want to have a score of 680 or even higher to make it a superior option over FHA. Then the other loan type to keep in mind is going to be jumbo. Jumbos are loan types that have a higher loan limit than what the maximum is for conventional. So for many areas, the conventional loan max is in the 700s. So if you are buying higher than that, then you would likely need a jumbo. And in those cases, you will probably need a 700, if not a higher credit score in order to get approved. Now, after talking all that talk about credit scores, don't get too wrapped up in the number. And what I mean by that is the difference between saying having a 710 and a 720 is not going to make or break you being able to get your loan. It can have an impact on your closing costs, but not so much that you're not going to be able to afford the loan or get approved. One of the reasons that people really delay getting pre-approved early in the process is because they think that it is going to drastically drop their credit and going to hurt their chances of being approved. That's not true. FICO tells us at max that getting your credit pulled typically only costs you 5 points, if that. For most people, it is less. And it's good to keep in mind that the benefit of being able to start a pre-approval early is that you have more time to make adjustments, more time to make improvements on your credit, to understand how your job is impacting your loan and all of those kind of things. So again, because the difference of 10 points or even 5 points or even 15 points is highly unlikely to prevent you from getting a loan, I recommend that you get pre-approved early to know that you're on the right track. The bigger focus is to really focus on building those solid credit issues, to focus on building solid credit habits. And what I mean by that is making sure that bills are being paid on time, setting them up on auto pay if you can to assure that those little bills don't slip through and then have a big impact on your credit. Then also focusing on the balances on your credit cards. Sometimes people think that you might need to be debt free or you can't buy if you have student loans or credit cards, and that's not the case. However, because your debt utilization, how much you are borrowing compared to how much you could borrow on your credit card, for example, that does have a 30% impact on your score. So what you may want to do is just focus on those amounts to help boost your score a little bit more. But again, that's the benefit of talking to a lender early, because you can get customized advice on what steps to take to be the most efficient and save the most money when you're buying a house. If you have past credit issues, the first thing I want you to know is it is still possible to buy a home. You may need to pay some things off. You may need to dispute some things to be removed. But just because you've had past issues, it does not mean that you're prevented from buying. If your credit score is below 500, focus on your credit first, focus on your bills, make sure that your budget and your income is stable before attempting to buy a home. If you're in the 500s, still talk with a lender so you can get great advice on steps you need to take or confirm that there are options available. Now, the thing you want to keep in mind, though, when it comes to that is it can be tempting to hit the easy button, to want to work with a credit specialist or a credit counseling company or things like that. And unfortunately, there is a lot of opportunity for fraud and to be taken advantage of by these companies. You want to be careful of the companies that advertise nationally. Some of them have law in their name. And it can get a little concerning when month after month, all they're doing is taking your money and you're not seeing any movement in your credit score. What you want to do is make sure that you are speaking with a vetted company, a company that a lender like myself has said, I have worked with this person, I know what they can do, and that they truly work with you to educate you on how credit works instead of just disputing all these accounts, getting your credit raised up shortly. And then once those disputes get resolved and perhaps that money is in fact due to those creditors, your credit score goes back down. So be very, very cautious of who you are letting into your world, particularly when it comes to these credit counseling, credit repair companies. From there, you're going to want to focus on saving up for your down payment and closing costs. There are down payment assistance programs available. However, you might not always qualify for them. And typically they do carry a higher interest rate, which can further reduce your buying power. So much of what you qualify for is based off of the payment. So if the interest rate is higher and that pushes your payment up, that means your max sales price goes down. In terms of down payment, USDA loans and most VA loans do not require a down payment. Outside of that, you're likely going to need anywhere from 3 to 5% of the sales price as a down payment. It's important to know that 20% is not required, and most people do not put 20% down. Mortgage insurance is not a bad thing. It's a way to leverage money. The thing you also want to know when it comes to down payment is that can be a gift. So that could be a gift from your family. That can also be borrowed from another asset like a 401k. So if you don't have it in checking and savings, there are other sources of where you can get that money. And it's best to talk with the lender up front of what you're thinking to make sure that it's an allowable source. From there, you're going to have closing costs. Closing costs will vary widely depending on the state that you're buying in and your sales price. In general, closing costs are going to be around 2 to 5% of the sales price. The nice thing is unlike the down payment, the seller can actually pay those closing costs on your behalf. So you can work with your realtor to have that negotiated into the sales price because it can't be included in your loan, but you can work with having the seller to pay that on your behalf and still find a way that the seller gets what they need and you get what you need, so y'all both can have a win-win situation. If you're looking to save up for the down payment and closing costs, a couple tips are to confirm your budget, make sure that it's as airtight as possible, and maybe cancel a few subscriptions here or there, and just make sure that your extraneous costs and make sure that the extra costs that you have aren't keeping you from having a home that you want. Another thing that people do sometimes to save up for the down payment and closing costs may be to get a second job or a side hustle. It can be difficult to save up a down payment, particularly with inflation and the way that the economy is. So if you get a side job, that income that you earn can be used for your down payment and closing costs because you earned it. That income, though, won't be able to be used for qualifying until you've had that job for at least 2 years. Now you've done all the prep work. The next step is going to be to get pre-approved. Pre-approved is more than just filling out an application and pushing a button and getting a "we received your application." So you want to make sure that you're working with a lender who is actively working with you on your application, understanding what your preferences are, your needs are, and reviewing your documentation. Simply submitting an application, having your credit pulled, is not a pre-approval. That is a pre-qualification. There is so much that goes into a loan being approved that we really have to have that documentation and all those details to know for sure that you are pre-approved to purchase that home. It does not cost you, or it should not cost you anything to get pre-approved, because there are plenty of lenders like myself that will do this work up front to earn your business and to walk through that process with you. Ideally, what we will do during that pre-approval is discuss strategy around sales price, payment, down payment, closing cost, if you need the seller to pay those for you or not, and then work in conjunction with your realtor to make an offer on a home that you love that fits all of those other criteria. And it's difficult to do that if we don't have enough information. Once you're pre-approved, that pre-approval will last you for around 120 days, depending on the loan type. And the things that you want to keep in mind once you're pre-approved is don't change your job without speaking to your lender. Don't spend your down payment and closing costs. And if there are any changes to your credit, for example, you have to have a car or something else changes with your credit or certainly with your job, check in with your lender. Because remember, we're going to have to re-verify and update a lot of that information once you're actually under contract. Once you're pre-approved, now it's time to start looking for homes. And you will do that with the assistance of a realtor. Keep in mind that for most buyers, they don't have to pay for the realtor. The seller actually pays the realtor's commission. And it is a wonderful thing to be able to have a realtor in your corner who understands your state's contract, understands negotiations, understands the market, and is frankly looking out for you and acting as your fiduciary agent to make sure that it's a good process. It's a lot to go through on your own, and I recommend that you have somebody that you choose to represent your interests. If you don't know a realtor, you can always ask the lender which realtors they've worked with that know that area well or know this loan type, or simply will just be a good resource for you. You can also check with friends and family, but definitely talk to a couple to figure out what their experience is, what their knowledge is, and understand you're going to be spending a lot of time together. So you want to make sure that it's somebody that you trust and you enjoy their company. Make sure that you are upfront and honest with your realtor. If you need closing costs paid by the seller, tell them up front. If you are nervous about certain features or you really need a ranch home or whatever the case may be, they are there working for you. So get to those honest conversations as quickly as possible to help make sure the search is an efficient one. The last thing is don't feel rushed into a decision. You know that this market can make everything feel very stressful and very fast. And that is absolutely a factor because with limited inventory in some areas, you may need to make a fast decision. The biggest thing though is don't feel forced. And if it doesn't feel right, don't feel rushed. This is a big decision. So yes, talk with your realtor to understand what dynamics are going on in your market, how quickly you may have to make a decision, and try to do as much upfront work as far as understanding what your payment's going to be, what your out-of-pocket costs will be, and how you will be protected in that process as far as getting home inspections, a home warranty, and all of those things. However, you don't want to feel pressured because again, it's a big decision. This is going to be your home and it's easy to get swept up in the market mania, but try to do the upfront work. So when the right home comes along, you know that it's the perfect one and you want to make it yours. Also make sure that you are considering long-term goals. So it's not just about having a home now and what the payment is now. It's also how secure do you feel in your job? Do you feel like you are going to be living in this area for a while? This is not the market to purchase a home and expect to flip it in a couple years, but historical data absolutely supports the strength of going ahead and buying a home, keeping it long term, and being able to reap the rewards of equity. You just want to make sure you're not going to be boxed in a corner where you have to quickly sell after buying. And the other thing is you have to be prepared to walk away. If you can't come to an agreement with the seller, that does feel like a win. If you can't find the home that is the right home, not the perfect home, but find the right home, or maybe even you're under contract and you get an inspection that shows that the home is not in great condition, make sure that you know what the conditions are for you to walk away. So it is supposed to be a good thing. It's normal for it to feel stressful, but you want to make sure that you're not making a decision that you'll ultimately regret. I hope you found this helpful to understand the steps from concept to closing on your home. And if you have any questions, please comment with them below. Make sure that you subscribe. And if you want to reach me individually, I'm here to answer any questions that you have.